if we're not using AI to cure disease, what are we doing? Like, and if you think you're not affected by disease, well, everyone's going to be affected by aging. The one thing that I think about a lot is the difference between what I'm calling the inner economy and the outer economy. That's a trend that is so clear from history. It really hasn't reverted. There's no reason that we can't asymptote to having no disease, and that's a fantastic, interesting world to be in. One that I hope I'm alive for.
Hello, everyone, and welcome back to the California Future Society podcast. This week, I have my friend Chris Langerich on, and we talk all things AI. You cannot overstate how important tech is to California's economy. And AI is the most transformational technology we've seen, certainly in our lifetimes, and it will reshape not just the tech industry, but so many different sectors and pillars of our economy. And so Chris and I talk about how is AI going to transform the tech industry? We talk about everything from Mark Zuckerberg with Meta spending 9 figures on top end AI talent to how is AI going to transform the VC industry and how startups are formed and created. We even talk about things like biotech and other sectors of the economy that get Chris excited. I promise you, even if you're not technical and you're just someone who's curious, how is AI going to reshape how we work and how our economy is structured? This is a really fun conversation, and I guarantee that there's something in there for you. So without further ado, here's Chris. Chris, thanks for jumping on with me today.
Happy to be here, Jarrett.
And Chris, I know you've worn a lot of different hats. So at the front end, could you give us a quick overview of who you are and what you do and what your connection to California is?
So I'll start at the back because that was kind of the first. Moved to California back in 2010 to attend grad school at Stanford. Have stayed working in the tech industry ever since. And most recently, I've been working on a project called Context Fund, which essentially has been an open source philanthropy. So looking for useful open source projects that can sustain long-term growth of the entire tech industry. We worked on a project called Verification GPT fairly early on, which I think has now kind of gotten baked into many of the core APIs that you see when you go to Brave Search or Google Search. You're using products that look very similar to that on the back end. We've also done philanthropy. We've helped support nonprofit conferences, like a conference called Thinking About Thinking, which does these really cool AI conferences that are smaller than the larger, NeurIPS and things like that. But they really address some of the core issues of what is the frontier of the science going forwards. And yeah, I think I spend a lot of my day right now thinking about some of the questions around what VCs would call the idea maze, in the sense of what are the new scientific capabilities that we need to unlock a lot of more powerful capabilities for society, often as implemented as companies, and how do we estimate value for those, and then actually take action on those. And sometimes that comes as the form of demos. We built self-learning kind of demos very early on, and I had worked on self-learning at Meta. And sometimes they take the form of just kind of advice to portfolio companies, which I've invested in. So very, very familiar with this kind of unfamiliar, uncomfortable space of, the metaphysics of startups and the metaphysics of how something that's larger than a startup, but a little bit smaller than a government.
No, I love that. And that's where I think we'll end up focusing a lot of the conversation today, because I think it's hard for anyone to make sense of what's happening with AI, not only in terms of the capabilities, the technology, the latest demos that are coming out, and the degree to which those are going to completely reshape existing industries, but also the ecosystem around tech, right? Which has always been evolving, always been changing, but in the midst of this rapid acceleration and this feeling of an AI gold rush, I think there's a lot of fundamental questions about what is this going to look like? And that interests me as someone who cares a lot about the future of California, because the startup economy has been so central to not only the state's revenue, but also the state's identity, the state's role as being, the frontier of innovation. So excited to dig into all this. And maybe as a starting question, just at a feeling level of the experience day to day, how does this current AI frenzy, AI gold rush compare to your previous, decade and a half working in tech?
Yeah, well, I think in some ways this has kind of been an ongoing gold rush since about 2013, 2014. I remember early on, it was AlexNet that had kind of sparked this frenzy that we could do deep learning and there are a couple other examples there, but Google Brain obviously being early there. But it's been this kind of cycle, I would say. There was an early cycle of, hey, we're going to do everything with speech and NLP, and actually did a startup around that back in 2016. That was basically pre-transformer, pre kind of LLM, and so many of the applications that people wanted that they were calling speech were actually NLP, and they didn't work quite as well as you might have experienced with some of the more common kind of Alexa Siri products. Fantastic products for their time, but didn't always meet the expectations. And now I think we're getting into what could be the second or third wave of the decade, which is this kind of hype scaling driven, we're going to raise $2 billion in a seed type of growth that I think many of us that were early on in the space are just, shocked by. But it does make sense in the sense that the capital markets are there, the labor markets are there, the distribution markets for this type of tech is there, and importantly, the tech capabilities are there. So I'm pretty optimistic for this in the sense that we're going to be able to crack many of the things, for example, the Turing test and things like that, that we've traditionally associated with kind of human executive function. I don't think we're going to, robotics is going to take quite a while to transform the rest of that. But there's a ton of products that you can build that are very useful for people, even just having better, reasoning and executive function about the products of the web. And that's really has me excited. There's several other threads to follow there, but I'll leave it there.
I want to get into the technological capabilities and what you think will and won't be transformed in most dramatic sense. But before we get into that, I also want to talk about the labor market. Like you were saying, it's an ongoing gold rush with these intense feverish spikes in the last few years. And it's funny, right? Because I remember when I was an undergrad, I had a professor who was like an early, artificial intelligence researcher from studied at Santa Cruz back in the day, and he talked about these like AI winters, but it's kind of like these like decades long time scales, which feels like eons now. There's a decade or two where we thought we were going to make these breakthroughs, and then a decade of quiet. And recently it's been this continuous wave with just accelerating peaks. And I remember people talking about how there was a talent war for AI advanced talent even a decade ago, right? But recently, particularly with Mark Zuckerberg and Meta splashing, 9-figure contracts, it seems like it's reached this fever pitch, and it seems like it'll completely distort or not in a negative sense, but just completely reshape the talent market for top end AI talent. Can you speak to that and what the sense is among AI researchers and how you think this will shape the talent market going forward?
So I think at the high level, a lot of this is somewhat transient. 100 mil, 200 mil is mostly just Mark splashing the pot. And I think there's, for good reason, I think there's logic behind what he's doing in terms of being tactical and capturing the timing because of some of the scaling effects of this. Once you get people onto your network, then you get the data that comes back. Once you get the data that comes back, you can get much better feedback signals, which you can then use to train your models. And so there is this kind of, I would say, not quite a first mover advantage, but you don't want to be too far behind, especially in terms of getting to consumer products, precisely because of that data flywheel. So I think it's hard to say if this is sustainable. There's only a small number of corporations that will do this for the long run. But I would say, good for them. I think there's a lot of value to, assigning value to especially some of the people working in the back end that you might not necessarily see all the time. But I do think if you're looking at it that and saying, this $100 million, $200 million is a representation of a very non-fungible market, I think that's probably not true. And you're going to see a much deeper market than that represents. So there's good talent at DeepSeek. There's good talent in smaller corporations. There's a lot of talent. And some of the fundamental algorithms and the ideas around this are arguably not as differentiated as you might expect. The data can be, though. And the ability to get ahead of your competitors for a year does matter in AI.
If you were like, let's say 22 today, starting off as a machine learning researcher, where would you be focusing on trying to get jobs or work, or what would you be focusing on? Maybe it's the same exact thing that you'd be focused on today, but how do you think about that?
Mm-hmm. So within reinforcement learning, which is kind of the exciting frontier, there's this idea of kind of exploring curiosity and basically being able to figure out what data is useful and what is the value of data that you can self-generate. Because basically what we found is that as models have gotten better, the data that they're generating, the trajectories that they're creating, uh, tend to be more reliable on average, and then actually become useful sources of data. Now, this requires verification, and so for domains like math, where there is formal verifiers, this is quite easy. It's a little harder with things like fiction and things like that. But I do think you can really start to see strong use cases and for curiosity and kind of intrinsically motivated verification, where you're looking for self consistency and you don't necessarily have an external reward signal. So I think that's kind of where, if you're going to go after the problem, that's where I would start. The caveat, though, is that RL is, I mean, people don't talk about this, but RL is probably the hardest domain in machine learning. Like, it is a really all-encompassing thing, and versus other domains of machine learning are more kind of well constrained. For example, I can build efficiency improvements, and I can make a better model that way, but it's not necessarily hard to the same degree that you have to manage, multiple different loss functions optimizing against each other. This kind of mini-max game that RL agents often have to play, and so that's a more complicated problem, but it also is one that I think can be solved, or at least solved within a certain environment. Put it that way.
Yeah. Well, I'm curious on like the second order effects of that. So, for context, the firm I was at previously did some work with scale, data reinforcement learning with human feedback, providing that data, getting a global network of experts to be able to create the data, verifying the quality of different model outputs was, their bread and butter. And recently, $28 billion or so acquisition, primarily for CEO and top talent to go into Meta. Does that mean that type of data, that type of RLHF data of experts, verifying the quality of outputs in domains that aren't math, that aren't coding, that are really hard to verify what good is and what good isn't, is that just going to be increasingly in demand in these different niches where we want to see models improve their performance, but it's really hard to verify with just machines? Can you explain more? Maybe that's overly simplistic based on the one case study that I know really closely, but tell me more about that.
Yeah, I mean, at the high level, I think what we're going back to is mainframe computing, but with verification APIs or verification companies, even at that point. And this is something that we haven't really seen for a while. It's been kind of it was the PC era, and then it was the social media era, which is kind of an interconnected set of, essentially a supercomputer, social supercomputer that you can tap into to get information. And now we're going back to humans interacting with the mainframe, centralized executive function, and then that mainframe itself may be consulting verification APIs of various sources. So I would say, yeah. So generally, this verification, especially the economically valuable verification, tends to be hard, which tends to be a good place for companies. It's what Paul Graham would call schleps, hard things that humans have to do. And so if you can make that easy through an API, then you have a durable value, albeit not necessarily like a hyperscaling value. And so I think that's really a place where that comes in. Now, the challenge, as with most machine learning, is that value may not be durable, right? It is possible to overfit to the world, and so you are constantly going to be expanding the number of domains that you're trying to verify to be able to kind of continue to maintain that growth promise. But high level, I think, yes, verification is going to be is already a valuable component of the stack and will be increasingly valuable in different places.
Appreciate you digging into that. And I'm curious, I want to talk about your work at Context Fund. You already talked about some of the work you've done before, but what else have you been focusing on? If you had unlimited resources, what other types of problems would you be focused on? Tell me more about the portfolio and what gets you excited for you at Context.
Yeah. So I think one thing that we're looking at is basically can we build better APIs for funding? So can I make it really easy from the founder side to, give an agent access to my information, my company's information, my pitch deck, and it to give me, funding as a result. This is something that is complicated for various reasons due to securities laws in the U.S. and just in general, kind of most of the VC industry is very still very human driven, and that you're going to meet with multiple people throughout that process.
Can you
But
explain what the process currently looks like? I know you've been through YC, I know you're around startups, but for someone who's outside of Silicon Valley, the process of getting a startup funded in terms of hours and networking and like that whole scene of trying to get humans to believe in your idea enough to give you money. Can you describe what that looks like?
yeah, so the high level, your goal is to articulate a story about a growth rate. So that's your long term goal, and the kind of human goal is to build trust with VCs. And so this often takes it can take, for more skeptical investors, can take about 6 months of once a month meetings with them, kind of building rapport. And then at the end of the process, you have something that looks like a maybe 2 week to maybe 4 week actual raise process where you have a formal deck and you go give that. Now, many people do kind of like short run that and just say, I want to contact you only when my pitch deck is ready. But I have found that it does work a lot better if you already have some kind of warm relationships with VCs that understand something about your space and have convinced themselves that you're valuable enough to talk to on an ongoing basis. But that whole process, is hard. And if you look at the number of startup companies that get funded, you're looking at maybe 100,000. I think it's not more than that. So there's a small number of companies that get funded. Each company requires quite a bit of due diligence from the part of an investor, as well as also the founder kind of finding the right VCs who are going to fund that idea. And as a result, I think there's a lot of friction in terms of that funding process. So there's an opportunity where you can start to say, maybe NIH grants are not as lucrative as they used to be. So that's in the philanthropic side, but that also applies the same type of logic. And then there's also opportunities in the startup space to make funding more frictionless. So yeah.
Oh, I love the NIH example because I know when I worked in research at Rand, a lot of people would joke that once you become senior enough as a researcher, your goal is no longer really doing research. It's more just managing grants, applying for grants, and trying to secure funding for your future projects. And I know there's a wide range of experiences with startups. The hottest ones get bricks of cash rolled at their face. But for most startups, it's a very time intensive, labor intensive process of trying to find and source and meet with VCs and build that trust and show the growth rates and refine the pitch deck. Right? It can kind of dominate their life. And it's something that is oftentimes wholly separate from the act of actually building the thing that matters. So I find this concept really interesting. And I want to hear more about what you envision as the future for automated funding and which sectors you think it's best suited for, or maybe where it might be a little more challenging to implement.
So the two primary sectors you're looking at are philanthropic funding and VC funding. Philanthropic funding includes things, I would include things like NIH in the sense that you're not expecting a financial outcome. There's no equity instrument. And that is probably the most interesting market to go after if you were trying to build an API, precisely because there's, I would say, less of a centralization of that market. There's several different philanthropic donors. For example, you can talk to the Arc Institute, you can talk to Schmidt Foundation, things like that. But they tend to be kind of their own little entities, and they don't really talk to each other. As a result, they're more disconnected, and it's a worse experience, I would say, overall. And then there's the VC market, which in Silicon Valley is actually fairly interconnected. Once the classic adage is, if there's one VC interested, there's more than one. Even if you haven't talked to them yet, there is more than one. And so that, I think, is less. Maybe the API is a little bit less competitive because you have these ongoing advice relationships. You're not just the first thing starting out. But even then, I think there's aspects where for example, like I'm doing most of my diligence processes now using things like ChatGPT Deep Research, and it has been fantastic in terms of being able to bootstrap kind of understandings of the space and put things into numbers. And I think even just having access to tools like this already is changing the way that we do funding, possibly the speed at which we do funding. And then there's that kind of securities question of like, how much of this can we actually put into an API that is available publicly? And I think for the most part, you can put a lot of that in, but we do need to talk to lawyers to make sure that that's on board. Yeah.
Well, I mean, that raises a question for me then is if you're already accruing a lot of the value by using these tools basically in-house, right? For you as
Mhm.
an investor, or you can imagine a larger VC firm using, their analysts and their team using AI tools within. To what extent then is the actual API for distribution of the funds necessary or valuable? If most of the time and energy, at least on the VC side, is done in the diligence process, do you actually need an API to be the one that wires funds, or can you still have humans do that last mile and then have them just sit on top of this, relatively automated process?
Yeah, I think you're going to see the same economies that you do with many kind of large volume intake processes where the AI is doing the initial screening and then there's a human at the end that's, deciding that okay, this is actually a legitimate company. It's not scammers. Uh, and So I wouldn't necessarily pull humans completely out of the loop, but I do think you can do something similar to what Fast Grants has done, which is really reduce decision times to, a couple days versus a couple weeks. And also the give founders the ability to kind of multiplex their pitch decks, rather than trying to do the walk around Sand Hill Road and repeat the same pitch ad hoc to everybody all at the same time. So if you kind of play this out, I don't, to be honest, I don't know which direction this is going to go because there are other things in play beyond just the convenience for founders. But eventually, this might look like something like a marketplace, like an actual marketplace where a founder puts up a single pitch deck and then VCs kind of bid on that, in a kind of protocol. And there are various communities that have looked at this. I know Vita DAO has done some explorations there, but they're still tiny. This is like $5 million that's getting traded around longevity grants. So there's a huge space, to be able to put in the hundreds of billions of dollars that traditionally get funneled into VC in the U.S., into more accessible APIs. So I think that's an interesting space. Then there's other spaces. There's like micro grant spaces where I give you $1,000 to go explore this open source thing, and those can be potentially completely automated, especially if it's a philanthropic side where you're just looking to fund something. You're not looking for an equity instrument, so the transaction is easier. And yeah, I think there's a lot there. One of the big challenges is for a VC to make this decision is kind of navigating the ideas maze themselves for a specific company and doing that on kind of unfamiliar terrain.
Mm.
So very often, the absolute best company that's going to come out is not something that you've seen before. It breaks a lot of the patterns that you've seen. Not always, but many times. Airbnb would be a good example where you have very like a pattern completely broken. Um,
Yeah.
and so that AI is actually like very good at that, at like traversing all the paths of the idea space and making you making you aware of the possible directions that this company could go, and mapping that into kind of your value function. So there's a lot you can do there. Yeah.
No, it's an interesting point, right? When you're finding the next whatever, find me the next Uber, find me the next Facebook, find me the next insert any unicorn, um, requires breaking patterns to some extent, or veering off from the well trodden path of what's been tried before. That does raise a fundamental question of the extent to which uh, different AI systems trained on retrospective data will be effective on being able to navigate that well, right?
I think, I mean, I'd say ChatGPT is pretty curious. If you try something like DeepSeek, like it is curious. Um, but it does require human curation at this point. Um, but I think there's aspects where you can there. And one of the big challenges, obviously, when you're navigating the idea maze, either as a founder or as a VC, is that good companies have like 7 different independent constraints that they have to check off, which are different for each industry, or each value that, kind of product that they're proposing. And so you have this, 7 point checklist that you're trying to figure out, does this company hit this checklist? And also like, is my value system for this company even right? And like, am I actually am I listing the right boxes on the checklist? Um, and then you have to do this for all the different companies that you might see. So um, high level, boils down into this company versus its competitors, but kind of low level, you're looking at this constraint satisfaction problem, on an uncertain value space, which is fairly complicated.
It gives me a lot to think about, and I'm you described the marketplace for potential as one outcome, right? This future of a marketplace of bidding for funding. And we've talked a lot about the funding process itself. I want to talk now about more about the kind of the startup formation process and the way that AI is transforming how people think about what's achievable with what size of team. And one of the biggest trends of the last few years through the use of AI tools is people seeing smaller and smaller teams achieve larger and larger outcomes. Essentially, having force multipliers on a few really gifted, talented people who know how to scale themselves up with AI tools. How do you see that shaping the startup ecosystem, and what kind of second order effects do you think will happen because of that?
Yeah. So this is one place that I'm super excited about this first wave of AI, which is mostly collaborative AI. Is that it has made very small teams much more productive. Um, like I've used it for coding apps myself that I needed urgently, and I was able to do that in a couple weeks versus maybe taking a couple months and having to scale out a team to accommodate that. And so there's quite a bit of I think we're going to look at software and we're going to say, why is it so rigid? And also, like, it's this really hard problem where you have to now map your problem to an app in the App Store, and there's 150,000 apps in the App Store, and they all claim to do the same thing, and they all have like okay ratings, and you don't quite know what's going on. Versus the ability to say vibe code like your own specific app that does what you want it to do. Now, I don't know if I'd use that in like a high, a very high production, high stress production setting, but there's a lot of kind of like personalized apps that are going to be necessary for satisfying problems, and sometimes the app discovery process will be harder than actually just re-implementing it yourself, which has been true for software engineering generically, and many engineers do this. That's why they have such cool setups at home. But yeah,
No, it's one of my friends keeps talking about how AI is fundamentally changing the build versus buy decision inside so many companies, right? When you have engineering resources at your disposal, so this is even removing yourself from the early stage startup game, but just within enterprise companies or mid-sized startups or anything of that nature, you have this choice: do we pay an outside vendor for this enterprise grade software solution that we have to get on the phone with someone to figure out what the price even is, or do we just build it ourselves internally? And like you're saying, for you know high cost, high value stuff, you want to go with what's tried and true, but there's a lot of software that isn't you know premised on life or death outcomes. And so for companies to be able to just build that in house or scale it up quickly, or that could fundamentally change things. And one of the things I'm curious your thoughts on is that so much of Silicon Valley, at least the large players, a lot of large companies, especially ones that maybe are less popular, right, are these like big enterprise SaaS companies that are premised on the idea that we're just going to continue selling this super high margin SaaS product on into eternity, and the cash flows are going to continue flowing. Not, I'm being facetious, but they're premised on this idea of longer timescales. Of for the next 10 years, we expect to be able to continue selling billions of dollars of our software. But if more increasingly companies find themselves able to build alternatives, do you think that that'll change some of the economics, some of the fundamental assumptions underneath SaaS players that have kind of made up the bulk of, like, let's call it the upper middle class of software companies in Silicon Valley?
absolutely, yeah. So that's one effect, and it's a really interesting effect. I think the other thing is just productivity growth. So a lot of these problems that are kind of this too small to be a formal product, but also are like a burning problem, tend to be internal tools. And so if there's lots of these little internal tools that you need to use, especially if you're doing something like complicated problems, like in science, biology, like all these little scripts that you're writing and things like that. So you're gonna see essentially changes in SaaS valuation, but also productivity growth as a result of changing over to some of these build decisions. At least that's the hope.
What am I not asking about how AI will reshape Silicon Valley and San Francisco and the tech economy over the next 5, 10 years? Are there any other trends or shifts that you think are coming in the way that companies are formed, invested in, built, and scaled, that people should be thinking about more?
Um, well, I mean, I think we're gonna see a like I'm most excited about TechBio. So
Yeah, let's get into
TechBio.
that. I know it's a top hot topic for you. Let's talk more.
Well, one of the big reasons is TechBio kind of tech obviously technology, bio is biology, is the opposite of traditional biotech. Traditional biotech, you are taking a single molecule, you're taking it through uh, testing and eventually clinical trials and getting it out for humans. TechBio is the other side, which is generating bunches, very large amounts of raw data and then mining that data to generate hits, turn those hits into INDs, kind of playing in the early stages of that process.
And what's an IND? Sorry.
IND is basically a category within the clinical trials process, which is kind of
Okay.
the earlier category,
Okay.
for you're doing some investigations to understand how how validated this is.
Okay.
Um,
So biotech historically, you're saying, is kind of doing these in the lab experiments with molecules, trying to find promising drug solutions to different health issues, and then that's where the value is. And you find, there's some almost like venture style power law outcomes of you try a bunch of experiments, a few hit, of those, a few will go on to be mass scale solutions to major problems. But that's kind of the space you're thinking about. Is that the right framework for how I'm thinking about it?
yeah, exactly.
Okay.
So I mean, at high level, like if we're not using AI to cure disease, what are we doing?
Yeah. Yeah. Yeah.
Like, and if you think you're not affected by disease, well, everyone's going to be affected by aging. So there's this. So I would say, like, high level, like there's a lot of motivation to go after these things, and we're just now starting to get some of the tools to actually go after it in scalable ways, which I think is extremely exciting. Um, the other kind of motivational factor is if you look at the history of medicine, it is for the most part a pretty positive history. We have progressively discovered new cures to new diseases. The diseases we're going after are often more specialized than they were before, and so we're kind of asymptoting towards this process of potentially having cures for all diseases. It sounds crazy to say, but that is possible. So TechBio just kind of adds fuel to the fire, and says, let's continue down this asymptotic, which we've previously done with a lot of hard human work, but also add AI into the mix, and not only AI in terms of the specific experiments but we're running, but also the second order AIs that are going into building productivity frameworks and tooling and all those kind of things that add to that growth. So I'm really excited for kind of the next 10 to 20 years in biology, as we're starting to see. Right now, we're front loading a lot of that growth. Like we're starting to see, a lot of promising companies getting funded with substantial amounts of money to go after small pipelines in the process. For example, predicting binding affinity for a T cell protein, things like that. But then, like, as you actually think about the future and putting those APIs together, potentially building vertically integrated companies over those APIs in ways that are hyper efficient, you may start to see something that looks kind of like a new wave of biotech companies that are like fully vertically integrated in the way that the industry hasn't seen before, and as a result, are extremely efficient in terms of figuring out the systems that they're targeting, figuring out how to target them, and then actually getting those out to clinical trials that are successful.
So help me understand. I don't pretend to know much about biology and how it works and the drug discovery process. At both, can you kind of walk me through how AI will help accelerate process of discovery, like you're describing? Can you give me maybe some examples
Mhm,
of types of problems or ways that it's implemented, ways that it could be used to increase the rate of hits?
mhm. So I think the first order basically is just finding good candidates and finding good systems onto which to apply those candidates. The systems, of course, themselves are kind of distilled into targets for a specific system. Um, and an example would be that in longevity, there's a system called the mTOR system, and then you have things that can interact with that, like NMN, which is like one of the more popular, kind of easily available longevity treatments right now. So, so that's kind of what I would consider first order effects, just um, increasing the speed at which we are able to, in silicon, predict many of the important characteristics of these molecules and systems together. And then the
So it's
second
almost like
order,
running some of the experiments at a more accelerated pace and not always in the physical lab, but sometimes through more advanced simulations that aren't able through AI. Is that a fair description?
right? I think you still need a lot of wet lab work still, but the goal is to be able to increase the hit rate of that wet lab work, and also to be able to understand uh, in long run dosage. Um, the reason being that basically every drug interacts with a specific system, and it needs to be dosed in a certain way for a certain person. And then it has many different off-target effects where it interacts with other systems. And those off-target effects are very often the reason that you have to cancel a clinical trial, because your drug or the way that you're delivering it or the dosage is not specific enough. And so being able to understand those systems deeply to the point that we actually have kind of a factor graph for them. We can actually point to, here's all the feedback loops that are happening, and here's what happens if we perturb one little, change some binding affinity, activate some catalyst, and this is how that plays out into the entire. I think it's phenomenally interesting, and you can do this you can do it at a single cell basis. You can do this on an organ level basis, but there's a lot of promising directions that I would say that give us that may be able to let us better predict the effects of what we're doing in a way that makes just for much more efficient clinical trials.
Okay, that's very helpful. And then at the secondary level, you were talking, or second order rather, you were talking about increased tooling, kind of these different and vertical integration. Can you explain more about that?
Yeah. So, I mean, the dark matter of almost every large company, especially doing complex stuff, is internal tools. It can be as simple in biology as like pipetting machines, faster pipetting machines that go faster. But like that's kind of a lot. Many of these things are not often sold in the public market, or they're relatively hard to sell in the public market because they're very specific for a specific use case. But the ability to quickly produce internal tools is one of the primary gating factors for the productivity of your enterprise overall. So being able to empower your scientists to be much more productive by making their own lives easier is going to be very powerful in the long run. So I think it takes time for this to play out, and it's often not as obvious as you see. But I do kind of agree with Greg Brockman has said, like, one of the most important things in increasing the productivity of the economy is just making it easy for everybody to access your tools. That's not the direct quote, but like basically he was getting at that, and I think that's very true. So I think there's aspects there on both sides where we're going to understand biology and we're going to be able to build efficient tools to address some of the problems that we have.
I feel like on both the bio side and the software side, the two pillars of themes, rather, what you've been talking about is personalization, as well as I don't know, removing friction. I need a pithier term for that, but right, like personalization, personalized software, more personalized medicine, or at least medicine that's more detailed to some of these minute, scenarios, things that we couldn't necessarily test for or evaluate previously. And then removing friction, right? Removing friction in the funding process, removing friction in the lab testing process, or even the internal tooling process. It seems like those are kind of the two themes of AI. And if you zoom really far out, right, think about history, it's, a lot of goods and services became widely available through mass production, but you don't have customization, right? You can stamp out 1,000 items, but in the 50s, 60s era, you get kind of like the standard issue, one or two brands of any given item, and that's what goes out to people. And then in the 2000s, you get like, direct to consumer through smaller factories, and then personalized data and more targeted sales pipelines and whatnot. You can sell people smaller goods or more customized things. And in the age of AI, it seems like that trend is just going to dramatically increase, where the software you consume, the medicine that you consume, the food that you eat, who knows, like a lot of the experiences and social media and things like that are going to be much more personalized, which is exciting as an individual, but also raises questions about society and kind of like the shared values, the shared experiences that people will or won't have. So anyways, just not really a question there, but that's just something I'm thinking about as I reflect on what we've been talking about so far.
Yeah, I mean, I think this is okay. I think one of the hard truths about humans is that it's hard to manage more than 150 social relations at once, something like
Yeah.
that. And so we were well past that scaling law. Like we scaled way past that, and we kind of broke everything. And so the social supercomputer that we relied on to distribute those goods and information to us, like, is not always working for us. So having access to centralized mainframes that actually build personalized products for us, and especially can apply to that 150 people that you care about most deeply, is a really powerful thing, I think, in terms of individual empowerment. You think of democratization, especially when you're talking about productivity tools, things like that. So I think there's quite a bit that of value there. And then also conversely, like the interesting thing is that the end products are often highly personalized, but we're getting much more centralized mainframes. Whereas the social supercomputer was and everybody, and then there were like a bunch of like high connection nodes, and now we're getting like 5 to 10 companies that are like the mainframe, and they're the interface for some of the data out there. And I think overall, as long as we have a competitive marketplace and for those mainframe companies, we're okay with that type of centralization. But it definitely isn't the same trend in both places. There's a personalized layer of each product that I need to build, and then kind of a centralized layer where the base products are getting uh, created and refined, and you're kind of climbing the value chain in terms of what you can offer to people.
Yeah. And then on the media, I was thinking about this in the context of personalized media, personalized consumption. Is that this is a very like hands-on example. I have a 2.5-year-old, and so I was just thinking about the fact how media for them is so much more fragmented than it was for me growing up. For us growing up, it's like you had Nickelodeon, maybe like some PBS shows, a few others, and that was kind of it. There was like a smaller catalog of children's media, and now it's like YouTube is so dominant with kids. Other things like they can consume anything that they conceivably want. But every kid knows who Bluey and Miss Rachel is. Like they know everyone consolidates, whether it's mimetic desire, wanting to have a shared experience or whatever. But even in a world of seemingly infinite opportunity, and maybe it's because it's millennial parents pressing the play button on what they consume. But even with the younger generation, there still is a consolidating on a few core experiences so that we have a sense of shared identity. So um, you can imagine that at like the industry level too, right? Even if you have personalized tooling or more readily accessible alternative toolings, you still want some industry standard. It's rare that you have companies that have, that operate with a completely different toolkit or tool base. Because then when talent transfers from one company to another, they want some type of shared language, shared experience, shared ability to understand what each other are doing. And so, anyways, I find that interesting, and it gives me a lot to think about when I think about how AI will transform um, how we experience the world. And it seems like, we talked about the potential for AI to essentially cannibalize existing SaaS players, also accelerate the rate of new companies. Depending on where people sit within the tech ecosystem, they'll feel differently about that. But from where I sit, thinking about just the future of California, it seems like regardless, so long as the AI gold rush continues to go, California is going to win because startups, there is no matching Silicon Valley, San Francisco to build your startup and scale your startup, particularly on the software side. And I don't see any reason for that to change in the foreseeable future. I know people like, Jensen at NVIDIA has talked about like AI saving San Francisco, right? With the bringing the boom back. Do you see any reason that California shouldn't be the primary beneficiary of the AI gold rush into the future?
Well, I mean, I have to say, like, a lot of our view in California tends to be fairly U.S. centric. We read U.S. media, we look at this. There's definitely like some really promising things going on in China and in UAE and other places. So I don't think we're necessarily the only beneficiary of this. But I do think that especially when you look at kind of the university, the VC pipeline, and the university that also brings in tech talent, it's definitely going like that is kind of the dominant reason that California has been able to uh, have all these nice services, partially because of the taxes that are coming on the tech companies and especially the new tech companies that go on to become hyperscalers and aggregating value from different parts of the world. So I do think that's a really big deal. So I would say yes. There's a lot of going for it. Legacy is always a good bet. However, I wouldn't count out some of the more emerging areas, and I think there's some interesting changes. For example, like China has made it much easier to get regulatory approval to try new drugs, and if kind of the U.S. doesn't keep pace with that, then there are risks in the sense that you're going to start to see what a continuation of some of the trends that we've seen, which is that it's a much more diversified globalized marketplace. And so I think to some degree, like this is a something that's not really to be feared. I think it's something indirect competition is fantastic for the world, and I think especially in the healthcare space, like we're all mostly working for the same long term goal. So I think that's something that is you're going to see as a kind of meta trend around this. Um, but I would say network effects work. they they tend and they tend to accelerate and kind of lock in value over time. Yeah.
Yeah. No, I think about the China comparison. I mean, today the AI action plan came out, and a lot of it was framed around racing with China. And the second pillar about it was all about data centers and energy use, building the physical infrastructure that we need in order to keep up with China, and I know on X and other social media platforms, if you're in tech, the chart of how much electricity China is adding per year relative to the United States, and them just completely surpassing us, has made the rounds as we anticipate an era where energy demand, energy consumption is increasingly critical for to develop the largest AI models, the different data centers that you need to run the type of compute that we expect will be needed within the next 5-10 years. So I guess that's the other factor too, right? To think about as far as why California and or America may not be as competitive in the future. But yeah, the
I
talent is
mean,
there. The talent pipeline's still there, like you're saying.
I would say it's competitive. It's a race. We should like no competitor in this space is going to take it for granted in the private markets. Um, and I think the other trend, kind of segueing a little bit this from kind of this direction, is the one thing that I think about a lot is the difference between what I'm calling the inner economy and the outer economy. Um,
One more.
so the inner economy essentially is agents in mainframes exploring the world via the web, using verification APIs, and then coming to their own conclusions. Transactions of money are not involved. All the money is provided kind of by a centralized company that's training them. Value functions are all internalized. The agent decides for itself how valuable this is. There's no public market that is going out to consult the value. And the transactions that are running on the inner economy versus transactions running in the outer economy. The outer economy is the classic network of humans talking to other humans using tools, and where compute is going between those two economies. And I think with a lot of AI, what we're seeing is movements from kind of human compute to AI compute in the inner economy that really have kind of interesting effects in terms of where information is located and kind of how you think about valuations and how you think about equity and things like that. So I think that's a really interesting kind of change, and we may start to see that certain regions of the world may become verification centers, right? Everybody clusters around we don't do bio, we just do verification, right? We just run the wet labs to do the experiments, and so there are some interesting places where as you start to actually kind of formalize this executive function that you're putting into machine, where you can actually start to distribute in different places around the world in a way that we've also done traditionally for physical goods. So just in time supply chains for verification, et cetera. All these things are going to start to come into play.
Love the idea of some up and coming countries specializing in some niche form of verification, right? Like in the same way that they might focus their economy on a certain natural resource or something like that. I'm trying to think of an absurd example of verifying the quality of literature or something like that. But biology is probably more helpful example, or certainly just energy rich companies being able to provide some of the more energy intensive solutions. But that gives me a lot to chew on. Well, I realize we're coming up at time. I end every conversation with asking people what gets you most excited about the future of California. So, Chris, what gives you hope? What gets you most excited about the future of California?
Yeah. Well, I think at high level, I would say that asymptotic curve towards curing disease. And that starts with understanding disease and solving disease and then actually distributing that out to the end user. That's a trend that is so clear from history. It really hasn't reverted. And I think that is where you want to apply to AI fundamentally, because everyone is facing problems with disease, problems with their health. So if we can look and say, hey, let's actually use AI to deeply understand the human body, deeply understand disease processes, and be able to intervene against these, there's no reason that we can't asymptote to having no disease. And that's a fantastic, interesting world to be in. One that I hope I'm alive for, to be able to see that.
I love that. That's an incredible note to end on at a time when people are increasingly divided, concerned, questioning, excited about what the future of AI holds. Having a goal like that's tangible and that is universal in its benefit and in its outcomes, I think is definitely a good note to end on. So, Chris, thank you so much for taking the time to talk to me today. I really enjoyed it.
Likewise, always a pleasure.